Here's a Bitcoin market update, and in this update I want to talk about the Bitcoin block mining reward halving that's happening on July 10th. So right now, every time a miner solves a block, about every 10 minutes approximately, they receive a reward of 25 Bitcoins, and that's getting halved to 12.5 Bitcoins. And what this does is it translates to less selling pressure on the market because miners need to cover operational expenses. So this generally means that they have to sell coins to be able to cover expenses. So that just translates into selling pressure. It's a form of inflation. So right now we have about 15.58 million Bitcoins in circulation. Many of you already know that the amount of Bitcoins will be hard capped at 21 million. 74% of Bitcoins have already been mined, which means that there's about 5.4 million Bitcoins left to mine. Now, the current price of Bitcoin is approximately $451, and our market cap is about $7 billion. And so what's happening is that our current inflation rate of new coins being generated is about 8.8%, and that's going to get reduced to about 4.09% as of July 10th. So now, many of you are looking at the price, and a lot of people are very bullish about this. But the price has been incredibly stable right now. And as we can see here, we have an ascending triangle with price action. Before we did have a symmetrical triangle, and it's shifted into a ascending triangle. This is generally considered a continuation pattern, especially of a bull trend. So what's happening right now is that the price is being held up because we do have enough buying support in the market to sustain the creation of 3,600 new coins. Now, either one of two things are happening. Maybe both of these things are happening. Either new buyers are coming in to absorb those 3,600 new coins being created or released, or miners are just holding off and not selling their coins, and they're waiting till the halving to be able to potentially sell at a higher price. Many people think that the price is going to go higher as a result. The reason for this is because in order for miners to stay profitable with the reduced rewards, the price has to go up to compensate for that. Now, if the price doesn't go up, it's still possible, though there still will be miners that will continue to do what they're doing. I mean, last year, 2015, the price was about half of what it's at now. So it's still possible. It'll just be more difficult. And they may only be able to do it at a break even or a slight loss, right? And the difficulty is also going up right now. Some people say that the Bitcoin halving is already priced into the market, but I believe that's not possible. It's priced into the market for where the market is at now, but you can't price in an event of a reduced inflation rate of going down to 4 or 4.5% until that event happens, right? Because there's still very real selling pressure happening right now. Right? So if we look here at the last halving, which was in 2012, it was November 28th, I believe, 2012, the price of Bitcoin was about $12.50 during that last halving. We even had a major correction prior to that halving happening, right? We only broke from past prior resistance up here after the halving, and you see the price ramping up. And 2 months later, so we got on a solid bull run for about 2 months. This trend is looking pretty healthy up until things go completely parabolic. And this is what we call the Cypress bubble. It hit 260. Then we had a massive correction where it crashed back down to about $80. And then we had some chop, some consolidation, and then another massive ramp up on the China bubble or you could also say it was the Mt. Gox Willie bot right here. So my point being is that we probably won't see the massive gains or the bullish effect until after the halving. It's possible the price might ramp up. We might start to see a bull trend leading up to it as people get excited because, the main difference back then is that there was no prior price history to go on the last halving. Now we have some prior history to go on, so people are anticipating a big bull trend. But the thing is I don't think we're going to get the massive gains that we did get back then, predominantly because Bitcoin is a much larger ship to steer right now. It has way more trading volume and it's a higher market capitalization. See, the more liquid the markets are and the lower the market capitalization is, the easier it is to push the price up, the more aggressive the gains will become. Now, once we break out of this this resistance zone right here, I wouldn't be surprised to see a run up to about the 650 area and then a correction, some consolidation. And it still wouldn't surprise me if we even hit prior all-time high. I just don't necessarily think that's going to happen overnight, and if it does, it's not going to be sustainable. I'd much rather see a nice healthy bull trend, but as a trader, I don't mind parabolic moves and massive corrections because it makes for some very, very profitable moves and a lot of nice volatility to trade in. The markets have been incredibly stable right now and a little bit boring to trade. A lot of traders have been looking for action in other markets. Pretty much the only people making money right now are the ones running, scalping bots that are just kind of scalping this chop like on automated bots. Stable markets tend to be good for scalping bots, but other than that, unless you're running one of those, chances are you're just getting chopped out. And maybe even over trading this chop because there's no clear trend yet, even though we in my opinion we still are in a bull trend. We have yet to make the next level on that bull trend. So I suspect that after the halving, maybe in August, September, or next fall, we'll start to see a nice ramp up happening. Then it'll become more priced in because the inflation rate will be reduced, which will translate to less selling pressure. And Bitcoin is really primed right now for a big move to the upside, I believe, predominantly because there's a lot of bullish news happening, as in Bitcoin's getting a lot of media attention right now as an alternative store of value. It's being compared a lot to gold, especially in on Forbes and various other economic news outlets. They're comparing Bitcoin to gold. The thing that's really hit the brakes, in my opinion, on this whole bull run has been the block size debate. And until we actually see a viable scaling solution happening, we're still going to see those breaks, right? But once a viable solution is released, then I suspect we're going to see some new uncharted territories. We might even break prior all-time high. That wouldn't surprise me at all. And I'm just basing that on supply and demand. I'm just basing that on the fact that Bitcoins are still relatively scarce, and it's considered the gold standard of crypto because it's one of the few coins that's managed to retain its value for the most part. Like, yes, it did have a massive bubble and run up to 1200 and a bear trend and all that stuff, but it is recovering, and it's done this before. You do have your bull and bear markets. It's natural, but if you time the markets right, it can be an extremely good store of value. And so as a store of value, actually, I think a lot of people are actually just hoarding their Bitcoins. I don't even really see it being used so much as a new credit card network, or I don't see a lot of consumer demand right now to pay in Bitcoin. I mean, people do. enthusiasts do use it, but for the most part, I think a lot of institutional investors and traders or investors with deeper pockets are either speculating or just holding on to their coins as an investment, as a long-term store of value. And you can measure that by looking at days destroyed stats. So this is just my market update. Hope you enjoyed the video, and I will see you next time. Cheers.